side, we see inflation that's still too high, and some of the recent indicators that we've seen, albeit somewhat stale, have been trending in the wrong direction. And so to me, I think we need to continue to keep policy somewhat restrictive to bring inflation back down to target.
What are those indicators that you're focused on that have been going in the wrong direction?
If you look at services inflation, some of the recent prints that you've seen in core services ex housing, that's continued to go up. If you look at like a 3-month average over the past 3 months, where that's been trending upwards, not downwards.
My colleague Sarah Eisen, who appears to be in a warmer place than we are right now, has a question for you.
I don't know. It's not that warm here at 7:20 in the morning in Vegas, but it's good to see you, President Hammack, and thanks for joining the show. Just on, I mean, it feels like you lean toward inflation is the bigger risk than the weaker jobs number, and that's somewhat of a hawkish view right now. You know, you referenced the weakening in the labor market. It's not just, you know, the higher unemployment rate we saw today. It's the war notices, you said. It's the ADP numbers, like the weekly numbers we got, 2,500 jobs per week on average is how much companies were shedding. The Challenger numbers about October layoffs being the highest since 1994. Isn't it the Fed's job to get ahead of some of this weakness and preserve the labor market?
Yeah.
Isn't that going to be a harder thing to reverse than, say, if inflation is a little firmer down the road when it comes to monetary policy?
Well, Sarah, it's great to see you, and we look forward to hosting you out in Cleveland at some point, so you can come and enjoy the cold weather that we have all through the winter and the great snow that we get, our lake effect snow. Look, I think when we look at where we are from a labor market perspective, I had been anticipating in my forecast that we would see some further cooling in the labor market, and that seems to be what I'm seeing when I look at all those various indicators that you pointed out. It's important that we balance that. We have reduced rates 50 basis points already through the last couple of meetings. And so I think that we need to maintain a somewhat restrictive stance of policy to make sure that we are continuing to bring inflation back down to our 2% objective. It's great that inflation expectations remain contained, but that is a place that I remain focused, that we continue to bring inflation back down to target. And so right now, to me, monetary policy is barely restrictive, if at all, and I think we need to make sure that we're maintaining that somewhat restrictive stance to bring inflation back down.
Is she implying hike?
I'm just not sure that a lot of folks would agree with you. For instance, in the housing market, I mean, it feels very restrictive. Housing affordability has been a problem. The average first-time home buyer now is 40 years old, in part because of affordability challenges with higher mortgage rates. We also continue to hear this growing gap between low-income and high-income consumer. The Walmart CFO just told me about it. That's getting worse. So doesn't that feel like restrictive policy that the Fed should try to make things easier for?
Go, Sarah.
Well, on the housing side in particular, when I was down in Columbus meeting with a variety of businesses, there were some construction companies represented. And what I heard from them was that the cost of materials and labor is as impactful and is as much of a deterrent in terms of new home production as mortgage rates. They're buying down mortgage rates, and so there's been some support that happens on that side. But what I hear all across Ohio and eastern Kentucky and western Pennsylvania, the various parts of the district, is that it's really hard to find laborers, particularly skilled trades, and that's a place where it's continuing to elevate home prices.
Beth, we're here at the Financial Stability Conference that you hold every year for 13 years since the great financial crisis. And I think I got to know you in the 2019 repo flash, whatever. What do we call that? Do we have a
repo eruptions?
Repo eruption. Okay. Did you have a little deja vu at the end of October? Did you begin to be concerned about what's happening with the tightness in the repo market?
We expect to see some fluctuations in money markets.
Okay.
We had Fed funds, which is our target rate, was squarely within the range. What I would have liked to seen was more usage of the standing repo facility, which is a monetary policy tool we put in place to help manage rates, to keep the broad constellation of money market rates within the range, the band that we put forward, which right now is 3.75% to 4%. And so it's something that we need to monitor closely. But I'm glad that you brought up the Financial Stability Conference that we're going on right now. It's really exciting that this is our 13th year that we've been hosting it. We have two great keynote speakers here in Itai Goldstein from the Wharton School. Is going to be talking about fragility, the sources of fragility in financial markets. And tomorrow we'll have the Vice Chair for Monetary Policy, Philip.
But I want to ask you about fragility, because a couple things that you've mentioned, private credit and the AI bubble. Could you take those separately and tell us, and then together, the extent to which you have concerns about stability in the financial system from those two sources?
Sure. I talked about three things that I called out this morning in my remarks. One was private credit, which is a place that I'm spending a lot of time looking at that. The second was stable coins. And the third was the emerging risks from easing policy into accommodative financial conditions. AI is something we're spending a lot of time on as well. There's a lot of innovation in the district around
Oh,
AI.
come on. Pick something to talk about, lady.
Pittsburgh, meeting with some folks from BNY who have actually their largest U.S. office in Pittsburgh. And that is the center of a lot of their innovation around AI and the focus that they're doing. They showed us some of the tools that they're using, and they're really at the cutting edge. When I travel the district broadly, I'm hearing a lot of different stories about how AI is getting incorporated into different workflows. At Ohio State, they talk about making sure that every student is taking classes in AI to think about how they should be using it. And so they're more forward-leaning in it. What I hear most often is that AI is going to be a complement rather than a substitute to workers, and businesses are using it to help enhance the customer experience and give them better insights around what's
the way I think about it is whether or not it's something that's going to keep me up late at night or get me up early in the morning. And I'm a little selfish about this because the only thing I really care about is systemic risk.
Or how much sleep you get?
No. That doesn't matter to me. But here's the thing. People can lose as much money as they want going into something, but if it messes up the banking system, that means more work. Okay, so when I think about this, do you think about the concentrations? Does the AI bubble have a wider impact on the financial system? We woke up to the derivative explosion in 2007, 2008, and found out it was directly linked to the banking system. Do you have concerns, either private credit or what's happening with AI?
In fairness, say banking was good, so let's see what she says.
System that are reasons for concern.
Yeah, so the financial markets are not the real economy, but they are an important transmission into the real economy. And so it's a place that I watch carefully. In private credit in particular, there's a lot to feel good about in private credit markets. They tend to have reasonably stable funding. They've got 7 to 10 year lockups. There's no early redemption features. That means that they can stay in the investments that they have for a long period of time. On the other hand, there is ties back into the banking sector in that there's a lot of lending that's happening. There's been significant growth in the lending that's happening from the banks into the private credit universe, whether it be NAV loans, capital call lines, or other sorts of lending. And what you tend to find in private credit, because it's outside the banking system, is that they use special features like payment in kind, which can increase some of the borrowings that some of the riskiest lenders or less profitable companies can undertake. And so it's an area that I think we need to watch. I feel generally good about private credit because of the long-dated funds that they have. But you have to remember that many of the investors are going to be endowments, pension funds, and insurance companies. And if we see significant losses for pension funds, I'm not going to feel great about that.
One last question on rates. I want to get back to that. Are you a Fed official who believes that long-term rates should come down? In other words, we're operating above neutral, but it's a question about the pace? Or do you think we are at a neutral rate right now and we're okay here?
I think we're right around a neutral rate. I think we're barely restrictive, if at all. I grew up in the 90s in the markets, and so when I look at the level of rates, to me, they don't seem particularly elevated. I grew up when rates were kind of 3 to 6%. And so having a front end and a yield curve that's right around that 4% range feels to me like actually pretty modest interest rates.
Beth, thanks for having us here in Cleveland, and thanks for joining us this morning.
Yeah, thanks so much for making the trip.
Carl, back to you in
For what it's worth, she's 53-ish, somewhere around there. But anyway, okay, all right. She's almost somewhat hinting at this idea of like a rate hike. But right now, you've got the market pricing in a 39% chance of a cut. So interesting. Worth making a little note about that. Hinting almost at a hike, certainly not a cut. Market now pricing. Yeah, market pricing 39% chance now. And then by January 28th, that's my birthday, we are pricing in a cumulative 1 cut. And then the second cut's not really priced in until June. Third cut is priced in September of next year. So really, really slow adjustments down is what we're seeing here. Okay. All right. Interesting. All right. Very well. So let's go take a peek at the rest of the market. So the market broadly, obviously, I mean, very green following the NVIDIA earnings yesterday. Tesla is doing phenomenally. I think it's going right to the 433.99 line. And you're seeing a little bit of resistance on, I mean, certainly risk assets. I don't think these mean much. We were talking about these in the Alpha report this morning, Ethereum and Bitcoin, and sort of what the fact that they're going down means. But I do think it's very interesting that NVIDIA never went higher than it was in the pre-market. It suggests a little bit of like, you know, people saying, all right, we're good. You know, we made our money, we're good. So I think this is interesting to see. I also think that, you know, some of this run that we saw in pre-market on Palantir has bled, as well as CoreWeave. CoreWeave's come right down to my line on 79.27. So, oh, and weird, Jack in the Box, after terrible earnings yesterday, moving up today on the jobs report. Not a surprise that a consumer-related play is moving up. Common that after a good jobs report, you would see consumer-related plays move up. How are yields doing right now? Let's see here. Yields, if I go take a peek, we are looking at the bonds. We're looking at, oh, slightly down actually. Down at about 4.115, but I mean, barely a move at all. Who cares about this? Then you've got, let's see here, gold at 40.87. I've got oil stable between 60 and 64 for WTI and Brent. And then, of course, we're seeing some of that weakness on Bitcoin. Hammock didn't really tell us anything, I think, juicy. Yeah, AMD not holding 232 is another example of some of that nervousness. It's not all gone. Like, I know there's this idea that, NVIDIA earnings killed all the nervousness. This is not indicative of that, right? This slow action here on NVIDIA, or sorry, on AMD, the slow action on NVIDIA, CoreWeave chilling out. Like, yeah, people bought it in the pre-market and pumped it up, but it's certainly not continuing its enthusiasm, unlike Tesla, which so far is doing very well. So probably just, it's a high bar to keep the Qs going when they're already up 2%. Good news is they're holding on. Wells Fargo says Fed should not cut. Wells Fargo says Fed should cut in December. Citing easing inflation. Oh yeah, we had some other, we had some juicy articles I want to talk about. So we're gonna pull these up. Let's listen in here for a moment while I pull those up.
Anything happen here?
There are absolutely parallels between the internet era and the AI era, and I do think it's yet to be proven which business models are going to work in the world of AI. There's no doubt in my mind that there is enough, if you just look at the cost savings from a labor standpoint, for example, there's no doubt in my mind that all this spending over time will earn a return just from labor savings alone. Now, whether or not the folks who are spending that money are the ones...
That's an interesting way to put it, this idea that at the very least, if you spend this money on AI, you'll save the money on labor. Yeah, but what does that do for the economy? I think, saving costs on labor is great in the short term, but boy. All right, let's see what we got in the news. All right, so we've got, let's see here. Okay, trying to stop the state-based laws for AI. Stocks get AI boost. We've got existing home sales hit 8-month high in October. Verizon cuts non-union workforce 20% in cut slashing. So this is at least 13,000. They said it'd be somewhere, it was expected to be between 15 and 20,000. So these layoffs are starting now. Gave notice that it will begin cutting more than 13,000 based on an internal letter seen. Right. And then they're going to provide $20 million to basically help people transition to a new job, just to for an avoidance of doubt. That's to a new job. Let's see here. Middle class is shrinking, and that's okay. I don't know about that. I feel like the middle class was always, what America was built on. The classic sort of American dream. So why are they saying this is okay? Americans have never been richer. The bad news is most of them don't feel like it. Okay. Tremendous growth in income and wealth in the last century, even for the poor and middle class. Okay, so you're going to tell the poor that you should stop complaining because you're richer today. Got it. Income inequality has increased. The very rich got much more rich than everyone else. Income distribution is flattened. Americans earned more for several reasons. Blah, 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 blah. All right. This is boring. All right, what does the Wall Street Journal have? We have hiring defied expectations. Agreed. We've got, let's see, Walmart, some even more of that movement of that higher income user or spender to Walmart versus like a Target who's clearly losing here. Unsure that's great for all consumers, as it could just be, people are going to Walmart instead of Target. Because remember the difference. Like, I think there's a here you could sort of almost depict it on the stocks. But if you go to Walmart and compare to Target, and then look at the last 5 years, right? We've seen this wedge before, but I think it's an interesting difference here. Watch this. So, when did Walmart combine boys and girls clothing? That was so dumb. Target. When did Target combine boy and girl clothing? It was like 2021, I feel like. Target moved to combine gender neutral styles, separate clothes still happened. They had the cat line. When did they merge it though? I don't remember. I guess it doesn't really matter, but somewhat interesting. So I'm going to mention Target focused on combining girl and boy clothing, or Target focused on gender neutral stores and remodeling gender neutral clothing and remodeling stores. Walmart focused on cheaper prices for people. And here are the stocks. TGT down 49% in 5 years. Walmart up 114% in 5 years. Kind of interesting. Like, I feel like that's a little bit of a tell. You focus on silly policies and things that don't matter versus why are people actually going to your store in the first place? Because they want good value. Yeah. Sucks for Target, because I like Target, but they've screwed up. So let's see here. Gold and handcuffs, private equity firms. Oracle was an AI darling on Wall Street, then reality set in. Let's see here. Oh, that's a good idea. You take a 14-day cruise and then you don't have jet lag probably, huh? Let me see. Let me see if that... poking fun at those who whine about jet lag. Used to take... No jet lag. Ah, that's interesting. Yeah, so if you take if you take a cruise, you get so much time to adjust. It's actually kind of an interesting idea. I've never done a cross-Atlantic cruise. I'd probably lose my mind. But that is interesting. Okay. This is the news today. Cut down palm trees or dodge coconuts. I guess we're having a really tough day today. All right. Let's see here. I wonder what HELOC rates are today. Current HELOC rates. Home equity line of credit. What are we looking at? Yeah, I thought they were about 8%. Yeah, they're still sitting at about 8%. $500 up to $1 million at Bank of America. Huh. Nice. All right. New York Times. Jobs report. Jobs report injects more uncertainty. Holiday hiring slows, frustrating job seekers. Lutnick's sons cash in on AI frenzy. Yeah, we know. We know. We may be in a rational bubble. Oh, it's Mohammed. All right, so what is this? With a bachelor's degree in communication and marketing internship under her belt, she hoped a seasonal job in her field this holiday season might help her transition to full-time work, but she has applied to more than 30 positions without hearing back. Wow. Employers are signaling a more cautious approach to hiring. UPS has not released their typical hiring targets. Others, like Kroger, said they expect to bring on fewer temporary workers. Economic headwinds have made companies more guarded. The longest ever government shutdown, tariffs, artificial intelligence, searches for holiday jobs are up 27%, while seasonal postings are only up 2.7%. Wow. Wait a sec. Let's look at that Indeed report. This is from October 16th. Yeah, okay, it is from a year ago. Up 2.7%. Wow. Okay. That's a big drop. National Retail Foundation expects somewhere around 300,000 jobs for seasonal work. That's down about 30%, honestly. Cautious pace of announcements suggests people are not betting on a big seasonal surge this year. Wow. Holiday hiring market reflects a shift that began after the pandemic, right? Blah, blah, blah. Nearly 9 million Americans work more than one job, according to the BLS. Holiday sales are expected to grow 3.6% from last year. Let's see what people are saying in the comments on it. Let's go to readers' picks. Everyone I know cut way back on the holidays. Serving family meals, yes, but gifts this year are handmade crafts or grocery gift cards. We are giving money to food banks, fire departments. I find Target's statement that it anticipated a weak holiday season as strapped consumers pull back on spending for apparel and home goods a bit disingenuous. I'm spending this holiday season, just not at Target. I haven't been to Target since January 2025, when they chose to abandon their inclusion policies to fall in line with the administration. This person, so basically they got canceled when they went woke, and then they got canceled when they went anti-woke. Oh my lord, dude, they can't win. That's actually very interesting. Wow. Okay. Interesting. I don't know what to make of that. Apparently, I'm gonna write this. Apparently, Target can't win. Canceled for going woke. Canceled again for going not woke. With Trump. Comment from New York Times. New York Times comment. Interesting. Okay. Can't win. 12 replies. Virtue signaling by firms was just that, a signal with nothing backing up. All right, next. America's not great. Trump regime is ruining the national economy. Not the stock market yet. The economy is in recession. Well, I guess we'll see. That's interesting. All right, what do we have over here? This was the Indeed report. This is Mohammed saying the AI bubble is okay. The bubble will not pop because investors are overestimating AI because of three forces. Think, first of all, companies working on groundbreaking models. Blah, blah, blah. Google, Microsoft can lean on revenue generators. Not all will flourish. Right. So, I mean, this is probably the commoditization argument. Circular financing will ultimately prove unsustainable. Sure. AI washing is reminiscent to the dot-com bubble. Yeah, I agree. External developments will derail some firms, such as bad actors and others. Mohammed, this is boring. All right. What's the FT got for us? Financial Times, NVIDIA, Trump. Oh, this was hilarious. We should look at this. The FT did a really great piece on this. Who's OpenAI's auditor? And they call it Just Asking. OpenAI is committed to spending $1.4 trillion on data centers. That accounts for 2/3 of unfulfilled contracts at Oracle, which is valued at $630 billion. 2/5 of unfilled contracts at CoreWeave. Wow. I didn't actually realize that OpenAI was that much of Oracle's. I thought Microsoft had a big component there as well. It has around $375 billion of unfulfilled contracts with Microsoft. That's OpenAI. Latest funding implies $500 billion valuation. Complex weave here of insanity. So who's the auditor? It's a simple question. Should have a simple question. Can anyone name their auditor? Michael Burry. This person says they're a private company. They don't need to disclose their auditor. You will find out when they become publicly traded. You're probably just bitter after a blowout NVIDIA earnings. So in the finest blogging tradition, let's just dump what we currently know. Most public companies are audited by Deloitte, Ernst & Young, KPMG, or PwC. At the lower end, other names pop in. OpenAI's auditor is not disclosed. No obligation to release this information, but it's not trivial. In the past, OpenAI's nonprofit status has majorly limited its need to release such information. On its latest Form 990 return used to disclose for companies, a small San Francisco firm is listed as the paid preparer that would appear to be an accountant rather than an auditor. And that's here. OpenAI. Yeah, accountants would fill these forms out. Here it is. Fontanello, Duffield, and Otake. And that was in 23. Here's the firm's entire website. They took the website down. Oh, there it is. Okay. That's it. Dude, that's a hot website. This is so good, I'm going to have to inspect the source on this. Oh, man. Ay, ay, ay. Okay. The form says oddly that an independent accountant was not used to compile their financial statement, but that an independent accountant did audit the statements. Okay. Were they audited by an independent accountant? Yes. So OpenAI has at some point had an auditor, which is nice. Mildly confused about this company's role. So we called them on Monday afternoon in case they could offer any help. We were told nobody is around that could take our questions. Famous. We gotta Google this. Let's see if they have like Yelp reviews or something. Opens at 9 a.m. No reviews. Interesting. Next, we asked OpenAI. They declined to comment, but a person close to the organization told us that it has an industry standard audit with one of the big four. Who might it be? Deloitte, PwC, Oracle, KPMG. Let's see. It would seem impossible to avoid any conflicts. More problematic relationship would be if OpenAI was being audited by a firm that is also selling OpenAI products to its clients. Here's a clear clue. Ernst & Young and KPMG both sell products that employ Azure OpenAI tools for strategic intelligence. PwC became OpenAI's first resale partner and largest enterprise user. Oh my gosh. Selling GPT. Deloitte, meanwhile, is definitely using OpenAI internally but does not seem to be selling it. Instead, it has a business partnership with Anthropic. An even clearer clue is that Deloitte Ireland has been auditing OpenAI's UK entity. You'd expect it to match here. We've contacted all of the big four. TBD. Interesting. So we don't really know. Okay, Arthur Anderson. Getting FTX vibes from the company. Sam Altman, Sam Bankman. Oh, there's like a theme here, huh? All right, interesting. The FT. Oh, the Financial Times. All right, what else do we have? That might be a big nothing burger so far. I mean, everybody's sus about them, so I get the sussing. All right, what else here? What's going on with Bitcoin? Oh, look, the Q's dumping a little bit here. Just can't go anywhere today, huh? Consolidated. I mean, you're holding above 607, which is good. Bitcoin's dumping. Tesla couldn't quite make it to 434. That's the 33.99 line. You've got Nvidia's selling too, guys. And AMD couldn't hold. In our alpha report this morning, I said it was critical that AMD break 198 and Nvidia break 198 and AMD break 232 in order to get the Qs up. Because you can't get the Qs up much higher than where we were pre-market without them. Google's doing well. So Google's doing its part, but the others aren't. And, you know, poor Tom Lee has burned like $3 billion of investors' money on Ethereum. That's pretty wild. Dude, could you imagine? Hey, go manage my $12 billion fund. Yeah, sure. And then you turn around and light $3 billion of it on fire? Damn! Well, wish everyone the best. All right. Okay. Let's see. So the auditor, talked about that. How's the economist doing? Cracks are appearing in OpenAI's dominant facade. Uh-huh. Let's see what we have here. You mean $9 billion fund? Yeah, because it's gone down. You're terrible. That's funny. All right. So what do we have here? Okay, where are the cracks, baby? Let's see here. Anthropic deal. The Anthropic deal bears the hallmarks of spending in exuberance that characterized the AI boom. NVIDIA and Microsoft pledged to invest $15 billion in Anthropic, which in turn will spend $30 billion on Azure and NVIDIA chips. Right. Not long ago, such circularity with OpenAI was at the center of the merry-go-round. Now investors are spooked. Microsoft shares fell 3% after the announcement. Right. because they're taking equity stakes to literally fund the shystering. Oh, I want to hear what they're saying about Blue Owl really quick. We'll come right back.
There, but there are concerns. Like the animal spirits are not great right now.
Yes, look, Craig Packer was talking about the negative headlines, but the negative headlines have been coming off people pointing out some serious issues in the market. And again, when we have this conversation, and the conversation that's truly captivated Wall Street is when the cycle turns, when there is going to be a real credit crunch, would the big problems be in private credit? Would the big problems be in the banking sector? Goldman Sachs president John Waldron very clearly pointed out, there's no difference, guys. It's all the same lending system. But the reason we tend to focus a little bit more on the private credit system is the growth we've seen in the last few years. With so many funds flush with cash, you have this feeling that they were all competing intensely for a limited number of deals. What that means, and the risk there is, were their guardrails eroded?
Yeah.
And could there be more risks taken that look ugly when the market turns?
Sri, great having you on Bloomberg. Sri Natarajan from Bloomberg News. That does it for us today. We'll see you back here tomorrow.
Yeah. All right. Well, Okay, let's go back to the Economist piece. So, the reverberations from OpenAI's promiscuity partly explain the change of sentiment. The sell-off in tech stocks dates back to September when OpenAI agreed to spend $300 billion over 5 years on compute from Oracle. And NVIDIA in turn said it would invest up to $100 billion in OpenAI. Right. I mean, this is that circularity that we keep talking about. Okay. Alright, this crap isn't working. Whatever. That marked the start of $1.4 trillion in spending commitments, which has raised fears about a binge by an uncredit-worthy borrower to finance new data centers. Record reports from NVIDIA, and there's been a lot of talk about an AI bubble, but this is something very different, right? It's different, guys. It's different. Anthropic's three-way arrangement is a reflection of NVIDIA's bullishness. For the first time, the AI lab will train its models on NVIDIA chips. That's true. They did say that. Details about the terms are sketchy, but CNBC reported they valued Anthropic at $350 billion, up from $183 in September. Wow. Wall Street Journal reported that XAI was in evaluation talk at $230. It's not. I wouldn't be surprised. Like if the AI bubble commoditizes and turns, some of these companies are going to go bankrupt, and they're going to be such wealth destroyers. It's crazy. It's not just that AI labs are putting pressure on OpenAI. On November 18th, Google released its latest model, Gemini 3. Right, that's been very impressive. Gemini has 650 million users, which is still way shy, which is still shy of the 800 million. I mean, it's pretty close. But it's trained on Google's chips, right? More competition is better for users. All right, well, they didn't really give us too much insight there. All right, how's the info doing? SoftBank to invest $3 billion in factory for OpenAI data centers. Remodel a Lordstown, an electric vehicle plant in Lordstown, Ohio. Are they taking the Lordstown Motors plant? That's interesting. Okay. Huh. Look for gasoline cars to be crowding roads for decades longer? Yeah, probably. NVIDIA doubles cloud spending commitment. NVIDIA said it had struck deals to rent $26 billion of servers from cloud providers, doubling its cloud spending from 3 months ago. See, now that's a little sus because it's part of the circularity, right? So we should write down some of the sus things that people are sussing out. Oh, Bitcoin just lost 90 again. All right, so let's write this down. The sus on AI slash NVIDIA. Okay. So we're going to try to suss out the sus. So NVIDIA announced it has doubled its cloud spending commitment to $26 billion. So this is the, why is that a problem? Because, NVIDIA fuels the the very clouds that it's now renting back, right? This was famously concerning when CoreWeave asked NVIDIA to rent its unused capacity. Created some real concern, right? And this sort of like stacks up with what the Economist here is saying about this circularity, right? So some other circularity, we had the NVIDIA and Microsoft will invest will invest 15 billion into Anthropic. Anthropic will spend 30 billion on Azure contracts based on NVIDIA chips. Okay, so that's pretty circular, right? And then obviously, then you also have OpenAI. OpenAI will spend 300 billion over 5 years on Oracle compute, and NVIDIA will invest 100 bill into OpenAI, right? So there's some of the other circularity we saw. So we may as well just cite that right here. Then here, now we have this increasing spending commit. The cloud spending implies NVIDIA will rent several hundred thousands of its own graphic cards from cloud providers that purchase them, like Google or Amazon. So it would almost be like maybe an analogy. An analogy could almost be Tesla makes a cybercab, sells it, then rents it back for robotaxi. But it recognizes the revenue from the sale and then slowly spends on a lease for the robotaxi, right? No. Hey, maybe Tesla should do that. If it works for AI, maybe that's what Tesla should do. Maybe Tesla should do exactly that. I mean, it's so ridiculous. Like, because, normally you would just think if Tesla, or NVIDIA in this case, just makes the product and uses it directly, then Tesla or NVIDIA carry the bag of the product. And they don't get to recognize revenue. Right? That revenue recognition pumps the stock. Revenue recognition pumps the stock, baby. And that's kind of the name of the game. That's interesting. Okay. All right. Okay. NVIDIA said in a regulatory filing it will pay $1 billion to rent servers in the current fiscal year, and then $6 billion in both 27-28, $5 billion in 29, $4 billion in 2030 and 2031. That will make NVIDIA one of the biggest cloud spenders and users of AI. Wow. I didn't realize that would make them one of the biggest. NVIDIA cloud spending. So we have, it's actually interesting they break this down. $1 billion in 2025. We've got, oh, sorry. That's fiscal year 2025. So, well, it says the current fiscal year, which is their 2026. Okay, fine. Then, well, it must be 26. All right, whatever. $6 billion in 2027. $6 billion in 2028. See how they're buttering this out? It gives the data centers predictable revenue, basically. $5 billion in 2029. $4 billion in 2030. $4 billion in 2031. This gives data centers a predictable customer. But per information, makes NVIDIA the biggest cloud customer, or one of the biggest cloud customers. That's interesting. Okay, so that's very fascinating information right here. Oh, I hate it when it does that. The OCD is kicking in on the highlighting. All right, there we go. NVIDIA said it might not use all the capacity. Wow. Okay, I didn't know they did that. NVIDIA apparently saying they might not use all of the capacity. NVIDIA said some of its commitments may be terminated or sold to others. Commitments may be resold. So they're basically using their balance sheet to make the commitment. They're basically committing to the data centers so they build out. To get sales from the data centers, right? That way they could calculate their ROI or whatever. But does this artificially promote demand? Yeah, it does. It absolutely is. It's artificial demand creation. There's no question about that. NVIDIA spending commitments increased even though it has stepped back from its nascent cloud computing business to rend. Okay, DJX, cloud, blah, blah, blah. So they rent from, NVIDIA rents from Oracle, Amazon, CoreWeave, and Lambda. Wow. Yeah, that's kind of wild. So there are other things that people get pissy about as well with NVIDIA. I do want to just look at the sticks quickly though. So where did I put the Qs? Q. 608. Oh no. Oh no. We're going to 607. That's a test, boys and girls. That's a test. Oh, damn, bro. Oh, we're getting rugged. Oh. Who's getting rugged? Bro, who sold? Damn, dog. I just got to read an article. I didn't mean to crash the market. I'm sorry. I was just reading. Damn. All right. So, the other sussy baka thing is that people are talking about. Let's see here. So, I saved some of them. All right. This guy had a lot of bitching to do. So, his name is Shanaka Anslamperala. All right? So, Shanaka Anslamperala has some bitching about NVIDIA. So, let's see what he has. NVIDIA reported something devastating yesterday that nobody caught. Days of sales outstanding jumped to 53 days. Max says, sorry guys, I just bought. Oh no. It's because you were using Canadian dollars, Max. If you were buying with freedom units, the stock market would have gone up, damn it. Historical average 46 days. That 7-day difference represents $10.4 billion in revenue collected on paper, but not in cash. So, I don't know why this. Who cares? NVIDIA invests in startups. They buy cloud services. Cloud providers use that money to buy NVIDIA chips. NVIDIA books it as revenue, but the money's going to service. Yeah, we know that. But, you know, the revenue is growing faster than these receivables. Okay. Proof is mathematical. Accounts receivable doubled since last year. Inventory is up 90%. That's fair. He didn't even say it was up 90%. I just know it's up 90% because I read the financial statements. Cloud commitments, I agree. I don't love the cloud commitments. Did it double in 90 days? I know it doubled, but since when? Doesn't say. Oh. Okay. Capital trapped. 79.2 billion. I see what he's saying. But this is trickling out the 26 bill. Because you're only doing $1 billion of that really right now. So that's not really trapped. Inventory, you know, the big concern people have around inventory, I give Jensen a bit of a benefit of the doubt there, you know. Concern around 90% increase in inventory year over year. So I understand Jensen's take here. They don't want to be short on Blackwell, you know, Rubin, like they were when they first introed Blackwell. So they're building up components. You know, that's the pitch. That's the pitch, at least. Okay. And accounts receivables are up about 10 mil from the 10 bill from the last quarter, but quarterly revenues are also rising. Inventory rising while they're claiming insane demand. Again, like, I don't think that's that. Like, they gave an explanation for this. He says you cannot have a shortage and a surplus simultaneously. Well, yes, because it depends what the inventory is. You know, if the inventory, I wonder if they actually say in the 10Q if they break it down. Like, is the inventory finished product or unfinished product, right? I don't know if they give that in an SEC filing, but I'm gonna go look. So here's the filing. Actually, you know what? I'm gonna save this because I only have their press release. Their 10Q just came out. 10Q, NVIDIA, 11, 19. Okay, save. Bro. Dude, what the hell? Who's selling? What the F?
Pull up. Sync rate. Pull up. Sync rate. Chew on this.
Damn. Okay. So I want inventory. I have seen no news. No news. I assure you, I have seen no news here. Who knows what that line's from? One of the words in the sentence is different, but who knows what that line is from? Don't use AI, look it up. I assure you, I have seen no news here. Let's see who knows what that's from. Okay. Inventory. Here it is. See? We refer to customers who purchase as direct customers. Here is the growth in inventory. Oh, shit. Guys, look. Oh, wow. Wait a second. Oh, damn. Dude. Finished goods. 6840 divided by 2373. 109%. Dude, nobody knows what that's from. All right, well, then you don't get to know. All right, work in progress. 8735 divided by 3399. That's up 156%. $4,209. 23%. Wow. I mean, they tell you right here, dude. I mean, I get, like, they didn't mention this. That's interesting. Okay. You know, Jensen didn't say, yeah, some of our finished inventory is rising as well. But let me tell you what this is from really quickly, because it is right here. I assure you, I'm gonna get demonetized for it. It's worth it. If you haven't seen this, you gotta watch the whole thing. It's called Grammar Nazi. Why can't I hear it? Oh, duh.
All the Jews in this village.
Yes, I have heard that.
Are you aware of any Jews hiding in the area?
No, I assure you there haven't been no Jews in this village.
There.
That's it. I assure you, there haven't been no news. So there have been some news? Grammar Nazi, you gotta watch it. It's really good. It's a play off the Inglourious Bastard. Is it? Yeah. All right. So what do we have here? So going back to this is actually very interesting. Jensen did not tell us this. So Jensen, or I'm gonna write this. NVIDIA just released their 10Q. Jensen Jensen bluntly said, he didn't allude. Jensen said the spike in inventory was to have supply for chips in progress. He neglected to mention finished goods rose by 109% since Jan 2025. That's in 9 months. Rose by 109% in 9 months. That is sussy baka. That's a little sussy. So, I'm glad we looked at that. Okay. So, what else do they say here? Plant property equipment. What about, do we have a breakdown on the receivables? That would be interesting if they break down their receivables. Because their receivables we know grew. Inventory growth is right here. Accounts receivable is right here. Receive. Okay. Receive accounts receivable. Certain direct customers may use internal resources or third-party system aggregators to complete their build. 4 direct customers accounted for 22, 17, 14, and 12% of our accounts receivable balance. Oh, wow, dude. Look at this. Look at that difference in accounts receivables. Hold on, I'm going to break this down in a way that we could understand it, because I need to write it out too to see it. Oh, that's sussy baka too, boys. And the 2 girls watching. Wait a sec. This is weird. Look. So, on accounts receivable, okay, so watch this change over time. January 26, 2025, top one customer, 17% of accounts receivable. 2, I'll put number. Number 2 customers, 16% of AR. Okay, now October 26, 2025. You have customer number 1, 22%. Number 2 customer, 17%. Number 3 customer, 14%. Number 4 customer, 12%. Look at that expansion, right? Big direct customers using or slowing down their payments. Wow. That's also fascinating. Okay. Huh. Intriguing. Yeah, it has deferred revs. What about their cloud commitments? Let's see if they talk about that here. Strategic, in the third quarter, we committed to invest $5 billion into Intel. Long-term supply and capacity commitments. These are risk factors. Oops. Commitments and contingencies. Well, commitments and contingencies. Multi-year cloud service agreements. Oh, there they are. Okay. Some cloud service may be reduced or terminated or sold to others, in which case our commitments will be reduced. We expect cloud service agreements to be used by our research teams. Right. $10 billion into Anthropic. Wow, they're doing $10 billion into the Anthropic deal, because that means Microsoft is only doing 5. So does this mean MSFT is only doing a 5 bill of the 15 bill into Anthropic? That's interesting. Oops. Anthropic. Okay. Let's put that up. Okay. This is... Put that... here. We should call that... That would be... investment commitments. A little sus, huh? Okay. Oh, bro. Oh, yo. I don't want to zoom out anymore. Oh. We just flew right through 607. Oh. Oh. It was a red flag that it couldn't hold 232. It was in our alpha report today. Damn, boys and girls. Damn. That's not good. Yeah, to go bullish, I said in the alpha report, I said for this market to be bullish through December 8th, there's a reason for that date. We don't need to go into it. We need to hold 608. In order to hold 608, I said we need to hold 232 on AMD and break 200 on AMD, or on NVIDIA. Worst case, we lose 607. It would signal people are strapped for cash. And even great news isn't enough to keep the momentum going. I kid you not, this is the stuff we do in our alpha report. Like people don't believe it. Here, I'll just show it. F it. This is what I wrote. This is just part of the alpha report. If we lose 607 and trend back to 595, that would be very odd. And that would be told by, the following. So far Tesla is memeing, but you do have this 232 fail on AMD and the 200 NVIDIA break is a fail. This was regarding Tesla, the 433 by December 8th. If we break the Qs, approach 617. This is extra detail. I mean, we talk about this over, like we go through this for, 20, 30 minutes every morning, and then we do another 30 minutes of fundamental analysis. But the point is, losing 607, trending back to 595 is a signal that people are strapped for cash. And even great news isn't enough to keep the momentum going, consistent with a slow bleed, not a crash. That's very interesting. So losing these lines isn't great. Course member here, Alpha Report is always fire. Oh, thank you for saying that. Appreciate that. Try to do our best every day. And then, yeah. Okay. Odd. Yeah, we're only at 80 bips right now on the Qs. Let's go unaveraged for a moment. Wow. Volume's increasing. But it looks like we're trying to bottom right here. I've got 4 candles, a 4-candle uptrend right now. We'll keep an eye on it. But that was an interesting sell down there. Somebody hit the sell button. Wow. Okay. Let's keep looking at some of this. Well, I mean, that was the accounts receivable in the inventory. Let's keep looking at some of the other sus that people have. So, what happens next? Last chance to exit, somebody writes. Well, this person's got to be short. Let's see here. Oh, basically talking about having to write off some of these receivables. I'm not worried about losses happening on that. Okay. Let's keep going. Okay, Bitcoin's trying to get back to 89. Trying to bounce on the Qs. Okay. Can we get 5 minutes of a bottom here? That would be nice. Bottom out. We went all the way down to 604. We really need to get back to 607 because otherwise it's just bearish for the markets. Here, let me put a 607 line in. I'll put it like super gray so it's like a stupid line. But I'll do dark gray and we'll go 6, just so we can visualize where that. I think that's a test for today. Like we need to close above that. You know, NVIDIA and AMD already losing those lines isn't great. Huh. Oh, wow. Look at that. Okay. Let's go. Here. Let's go see. So this is interesting about what we're seeing on NVIDIA here. And a little sus. Let me see what else. So here's another person. The Coastal Journal says operating cash flow fell. And they think that's a sign, declining cash flow is a sign of declining or is a sign of accounting tricks. Okay, so let's look at their cash flow. So cash flow, plant, property, and equipment. I mean, the cash flow looks up to me. Are they looking at a quarter over quarter maybe? Because that's the 9-month. So where are they seeing? Are they must be looking at quarterly cash flows. That's accounts receivable, cash flow, fiscal year. Yeah, but we're not done yet with this fiscal year. Operating cash flow. I don't know if that's true what they're saying. Because to me, in the last 9 months, their cash flow has actually been just fine. It's way better, right? and their cash flow is at 66 bill versus 47. And then I've got, you know, a little bit more on PPE, but who cares? So I don't see an issue there. That I don't necessarily agree with this person. Okay. What's this? NVIDIA appears to be using financial engineering that closely mirrors Enron tactics without breaking the laws. CoreWeave has taken on $15 billion in debt to build NVIDIA GPU-dense data centers. NVIDIA, in turn, guarantees up to $860 million facility lease and obligations. Facility lease guarantee. Well, let's go find that. Facility lease guarantee. Facility lease. There it is. In the third quarter, we entered into an agreement to guarantee partners' facility lease in the event of their default. Oh. The agreement allows our partner to secure limited availability finance lease backed by our credit profile. Right. Because they can't, people don't believe in CoreWeave debt. Our maximum gross exposure is $860 million, which is reduced as the partner makes payments over 5 years. The partner has placed $470 million in escrow. Oh, that's good. And executed an agreement to sell the data center cloud capacity. If the escrow and cloud capacity are not sufficient to cover in the event of the default, we have the option to assume the lease for internal purposes or sub purposes. The guarantee, classified as a credit derivative with changes in fair value recognized, has insignificant value. Interesting. That's the CoreWeave guarantee then. Interesting. Huh. Okay. So here, the CoreWeave guarantee. Let's write that down. The Qs are not doing hot at all right now. Okay. This is $860 million CoreWeave guarantee. So CoreWeave can finance. 470 mil in escrow is good. I mean, I like that. I like that half of it is already in escrow. Interesting. Okay. I don't know that that's like Enron style stuff, but okay. I think that might be a little hyperbolic, but okay. This is interesting. What is this? NVIDIA prepaid supply and capacity arrangements. NVIDIA quietly... Short-term assets, long-term assets. Prepaid supply and capacity. Let me see if there's a prepaid supply. Prepaid supply and capacity. Oh, that is an interesting line as well. So why is prepaid capacity dropping? 12% decline. Now that is fascinating. Yeah. Okay, let's put that on our crap list as well. So, man, I don't like any of this. Prepaid capacity. So keep in mind, this stuff doesn't get released until the 10Q comes out after they go through all their earnings and stuff, right? So like, you know, heads up, this is all from 10Q, which gets released well after the earnings release, press release, and earnings call, possibly by design, right? Because it hides all the, you know, the good stuff. But it's worth knowing, like when you first look at the earnings, everybody just pays attention to the press release and the earnings call, which is what they want you to pay attention to. Then the devils come out. Wow. This is interesting. And I don't like it. I don't like it one bit. Okay. Let's see. Like I like looking at, you know, when somebody has an argument and then, you know, arguing that that they're wrong. But right now I'm looking at these things and I'm like, yeah. Okay. Let's see here. What does this person say? Comprehensive analysis reveals how NVIDIA uses accounting magic to boost its earnings to present a more favorable image. Okay. This is someone's Substack. Blue Owl, Apollo, all the private credits. Alright, is this going to be like some ad? A paid subscriber of the journal shared this with you. Okay. Well, that's nice of them. Well, this is a, I kind of like the design of this. That's a cute little icon. Probably used AI to make it. Comprehensive analysis reveals how NVIDIA uses accounting magic. Oh, that's cute. The illusion behind the curtain. Okay, what did you write this with GPT? That would be the ultimate irony, right? Oh yeah, look at the little what's it called? That M dash. To the public, the AI search has looked supernatural. They totally GPT wrote this. All right, let's just try to find the. And dude, how many M dashes are you gonna have in your GPT? You know, written blog post? Do you charge for this Substack? This GPT Substack? Jeez Lord. I mean, I used to use M dashes as a comma replacement after I've used a comma in a sentence. But now I'm like, I have to not use it because I don't want to ever come across as my stuff being written by AI. I mean, you guys see me write my stuff. Like, I leave typos on purpose because I hate this idea that somebody's just feeding me, like, a prompt, you know? Like, how many M dashes am I going to count in this bullcrap? But what? So it's like they're literally using AI to shit talk AI. It's the ultimate irony. Oh my gosh. All right, what's the point they're trying to make? Oracle is the first company to break character. Okay, so you're just talking about the CDSs. This is old news. The ultimate irony is... Can I command F the M dash? 29! 29 M dashes! Hold on. That's like, I gotta tweet it just because it's too funny. Nobody's gonna care. Nobody's gonna like it. But it's fine. AI or NVIDIA Bear uses 29 M dashes in article bashing AI. Fate loves irony. I think it's funny. I'm laughing. Maybe it'll be an inside joke. But do they have any actual point here? Dude, every article this person writes is GPT'd. You know, I've seen other YouTube creators, like somebody, who was it? Shoot, I forgot. I'm not going to mention their name, but I think they have like a Patreon or something like that. I had to turn it off because I was so pissed off at it. So I don't think I have any lingering notes from it. But it was like either a Patreon or some kind of like blog or whatever. Like they send out a newsletter and they're selling it. And I'm like, you're literally selling a prompt is what you're doing. Like it's a scam. Like anybody can do this. Like I don't want to read or listen to your crap if it's put together as AI slop. Because I could get my own AI slop if I want. I just ask for AI slop and then I get it. To me, it's very disingenuous. When somebody's writing a blog and it's all just AI. Like, what do I need to read your crap for? Anyway, the Qs are going straight to 595 so far, which is what we had in our alpha report, that if we lose 607, we are going straight to 595, and it is a sign of a liquidity shit show. Dude, Nvidia's about to go red. Oh my God. Bitcoin's about to be under 88,000. Oh no. Okay, boys. Hold on. You know what this means. I gotta go back to the Winklevoss tweet. Hold on. Sorry, this is Kevin just being an asshole. I apologize. Let me just get it out of the way. Let me get it out of my system. Where is it? There we go. Quote tweet and upload the screenshot, and then let's go. Holy smokes. Another chance to buy under 90K. Okay, there we go. This is probably why I don't get engagement on X, because I'm an asshole. So, I apologize. Oh, I typoed there. Let me fix that. Bashing AI. There we go. Fixed it. Cool. Good. All right. So... Oh my gosh, dude. Right back to the line, dude. Right back to 414. The Tesla 414 line is like magnetic. I hate to say it. It is this weird magnetic line. Okay. And now it's losing it. I'll just look away. If I just look away, it's fine. All right, let's go find some more AI sus. Okay. So more AI sus. Okay. Okay, OpenAI auditor. That was... Nobody knows. Okay. Inventories. What is this? That's the CoreWeave guarantee. We saw that. Yeah. I mean, we might have to summarize that. That's very interesting. Let me see if Barron's has anything on this. Oh, and the suits. And then I have to go to the bathroom, and then we'll do a summary of it. Okay. So here's Tesla. And then... Wow, dude, the Qs are only up 16 bips right now. Holy moly. At least Nvidia is somewhat bouncing right now. I don't know if that'll hold because we've played this game before. But wow, the profit taking is coming in. Nvidia. Okay. Yeah, no, all the coupons expired for the Meet Kevin course yesterday. Expired. somebody was asking me, should I add an extra coupon code? I'm like, nah. Put 2 more licenses in there for someone. Nah, you'll have to wait for the next one, I think is the right answer. Let me go to news. NVIDIA. I just want to see if there's any intel on this. So it says best NVIDIA. Let me see here. NVDA. And then we have NVIDIA cash concern to fuel AI ecosystem. What is this? Oh, the Qs are turning red. This is another record quarter off the charts. Okay. No. No. The suits don't pick it up on it. Wow. Have you learned about the Lehman Brothers Repo 105 trick in 2008? It reminds me of circular financing stuff, not the same stuff. No. I don't know about that. This is carry trade, right? No. No, I don't think it's carry trade. You know, Japan is in a very different... Oh, shit. The NTSB released a report on UPS the flight. Oh, damn. Thank you for sharing this with me. I want to look at that. Oh, we're going to have to go through that. Is that... When did they post that, though? Read the preliminary report? When did they post the preliminary report? Oh, wow. Oh, that's actually very interesting. A lot of pieces out. Okay. I gotta go to the bathroom. And then we're gonna do a summary here on this thingy here. Oh, it was bloody 7 a.m. in the morning when you streamed with a coupon last night. You are discriminating audiences from Asia. I'm sorry. All right. You know what? Ray, for you, the Asian or person in Asia, I guess I don't know that you're Asian. Here. Okay? I'll open the coupon for you for 11 minutes. Okay? I'll put like here, remaining time. I'll put, because it's expired, but I could change the time. I'll give you 10 minutes. No bitching. I love you. Display. There. All right. I made it live for 10 minutes. Code NVDA, but only for you. Maybe that'll be a nice little bit of generosity, and maybe then we'll bounce. Okay, pray the Q's bounce. I'm gonna go to the bathroom. I'll be right back.
On your side to defend yourself.
And then
the
we're
only
gonna
way
talk.
to deliver real-time capability on your side is to not have a mess of 40 or 50 products. The idea is to have them all be consolidated, running on a singular data layer and building agents that go and defend you, just the way bad actors are using agents to come attack you.
Nikesh, we just very briefly dropped into negative territory on the NASDAQ 100, having been up at 1.2.4%. And the story this morning when I woke up was that NVIDIA's forecast, its print, was soothing fears that we have about an AI market bubble. This might be the last chance I get for a while, so I'm going to do it. Give me the Nikesh Arora call. Are we or are we not in an AI bubble?
Look, we are in an exuberant phase of AI. I think it is the fastest technology evolution we've seen in our lifetimes, and I don't think it's about to stop. You can see huge bets being made by almost everybody. I think there is a lot of promise. You are seeing the consumer case. I think we underestimate how much the entire consumer landscape is changing and is going to change in the next 24 months. The idea of having applications where we have to go do all the work ourselves is going to become arcane. You know, you'll have agents that'll go book your Uber. We'll go get you your food from DoorDash. We'll book your airline ticket. We can all imagine a future like that. We all want a future like that. That's going to require significant amounts of compute at the edge. So I think from an infrastructure perspective, in history, we've never had a situation where we built infrastructure, it didn't get consumed and we wanted more. So I don't think the infrastructure problem is a real problem. Whether the demand comes right away or it comes a year or two later, I think that time will tell. But from a demand, from a technology fit, we're there. from an AI perspective, enterprises are slightly lagging that consumer adoption, but I think they're actually working hard to get there. You know, every time we do some...
Sorry. Sometimes duty calls. Not poopy. Duty.
Poopy doopy.
All right. Lisa Cook warns of possible market drop. Yeah, that's what they said in the minutes. All right. Man. All right. So what do we got now that I'm back? Somebody's linking the NTSB again. Yeah, that's the same one you just linked. I got it. We'll look at that in just a sec. But, am I enjoying sailing on old school RuneScape? I have to be honest. I haven't tried it. Yesterday was busy, man. I mean, you look, how many streams did we do yesterday? Dad, how many live streams did you do? Yes, son. Ow. Okay, wow. So, wild, though. Wild. Okay, good. Let's run through this. All right. Well, NVIDIA has released their 10Q, which contains financial disclosures that we weren't told about when NVIDIA first reported earnings. And it's leading to some skittishness in markets. This morning, the NASDAQ was up 2%. We were trending towards 617 and plunged. We are now, as I'm recording this, down a full 2 percentage points, and we're about to turn negative on the day. On top of that, NVIDIA, that was knocking on the door of 200, is now also rotating down, and AMD even lost 232. So what's going on? What was in these disclosures that got everybody a little nervous? Well, we're going to break down exactly what we saw, and I have to say some of it was shocking. Now, I want to be crystal clear about this. The way these companies do earnings is they release a press statement and CFO commentary and their overall earnings numbers. You don't get any details, really. You get some details, but you get like a little 2-pager, right? Then they do their earnings call. And then they release their press statement, which includes a little bit more detail. And then a few hours later, when everybody's going cheersing and drinking beer to the beat, then they drop the SEC filing called the 10Q. Now, the SEC filing contains some of the juice, and it's interesting juice. So first, one of the complaints that I've regularly seen about NVIDIA since earnings yesterday was that, but Kevin, inventory is up 90% on NVIDIA from their comparison quarter in January. So comparing back 9 months ago, inventory is up 90%. And I'm like, well, Jensen did address that. So my first rebut to that is Jensen addressed that. He said that they don't want to be supply constrained like they were with the original Blackwell launch, where they had so much demand and they couldn't actually get the short-term products that they needed, the components, the raw materials and the materials that go into the supply chain to actually give them the chips they needed. So Jensen argued, hey, we're just building up the components we need for the chips. You know, that's all. And I'm like, all right. I mean, like, I'm not going to call Jensen a liar. You know, I'm like, all right. So then today, I'm like, hey, boys and girls, the 10Q is out. And the cool thing about the 10Q is it actually tells you the breakdown. So we did this live. We're like, hey, maybe we could find the breakdown inside the 10Q. And boy, oh boy, did we find it. And boy, oh boy, is it not exactly what we expected. Look at this. Certain balance sheet components as followed: raw materials, work in progress, and finished goods. Folks, raw materials from January rose 23%. So they have 23% more raw materials in October than they did in January. But finished goods, which basically means ready to sell assets, doubled from 3.2 billion to 6.8. Now, maybe that's okay. Maybe that's just because they're selling more. But if they're quote unquote sold out, why are finished good inventories rising? And why didn't you explain that? You only told us that, oh, well, we just want more inventory because, you know, we need the components. But your raw material stuff only went up 23%. And this is a little sus. Your prepaid supply and capacity arrangements right here declined. Look at that. So the prepaid supply that you're hiring, you know, TSM and these other companies for declined from 1.7 billion to 1.5 billion. That's a 12% decline. Now, maybe there's an explanation for this, but it's odd. Work in progress did go up by 156%. That's fair. You know, maybe we could argue that's the issue, but raw materials are only up 23% and finished goods doubling. You kind of left that part out, Mr. Jensen. We didn't really like that. That was a little
poopy doopy.
You know, you kind of came to us and said, guys, guess what? We're doing so well. We're just building up our inventory so we have more stuff so we can print more because, you know, we're sold out. It's great. Yay. That's what we were told. But the reality is, that was a half-truth, buddy. That was a half-truth. Okay, all right. So it's not a complete lie. It's a half lie. Then we look at, okay, well, what are they up to with their investments? Because we know that they just partnered with Microsoft on a $15 billion deal. So they partner with Microsoft on a $15 billion deal. And the way this is going to work is Microsoft and NVIDIA are going to together invest in Anthropic. And then Anthropic is going to turn around and spend $30 billion on Microsoft Azure contracts that are going to be based on NVIDIA chips. You see what I'm doing with my hand here? The giant circle? We're going to give you money so you can pay us. Got it. Okay. Now, who's paying more of that? Microsoft or NVIDIA? Well, it turns out they disclosed it. Microsoft didn't. They actually disclosed it. Take a look at this. Commitments and contingencies. In November, we entered into an agreement to invest up to $10 billion into Anthropic. So in my opinion, that means that Microsoft is doing $5 billion and Anthropic is doing $15 billion. Interesting. So NVIDIA is having to do more of the investing and the heavy lifting than Microsoft is doing. On top of that, they guaranteed, we believe this is CoreWeave, they guaranteed one of their partners, I'll just read this to you. In the third quarter, we entered an agreement to guarantee a partner's facility lease obligations in the event of their default. That agreement allowed them to secure, you know, their financing and their data center or whatever backed by our credit profile. Now, CoreWeave, we think it's CoreWeave, put $470 million into an escrow. So basically, hey, can I use your credit score and I'll give you some of the money in cash, but I really want to build this data center, but I can't get the financing unless you help guarantee me. Okay, weird, but whatever, it's happening. On top of that, we have NVIDIA's full set of cloud spending commitments now, which have doubled since the last time they disclosed this. Take a look at this. This is NVIDIA's cloud spending plan. And they do this so that way these data centers can build out their data centers and have a guaranteed customer. But look at this. NVIDIA says we're going to spend $1 billion in 26, $6 billion in 27, $6 billion in 28, $5 billion in 29, $4 billion in 2030, $4 billion in 2031. According to the information, which this is in the 10Q we just looked at, according to the information, that would make NVIDIA one of the largest cloud customers. But wait a minute. If there's so much demand for the cloud, why is the very company that's building the chips to support the cloud becoming the largest customer for the chips? And so this is where I made the joke. You'd see it here. That would make NVIDIA one of the world's largest cloud spenders and users of GPUs. That made me sort of think like, man, you know, maybe Tesla should do this too. because obviously you could pump your stock by doing this. So maybe Tesla should make cyber cabs and then sell them to someone else so they could say they've delivered another car and they could recognize the revenue growth, and then they could rent back their own cyber cab, over the next 6 years in their robotaxi network. Now they get the best of both. They pump their sales today because somebody else bought it, and they pump their robotaxi revenue. Now, normally what a company does is you make a chip that you might need and you just use it. Like, you don't sell it and then borrow it back, because that's the accounting magic that's making people nervous. Now, don't get me wrong. Not all of the bears, I think, are, fully genuine here, or like fully, like, reasonable. Like, for example, there's this guy, I guess the Coastal Journal, and he's got this giant Substack dumping on NVIDIA. And I'm like, oh, this guy must be short. But the irony of it is, I went to his Substack and I did a Command F for the M dash. The guy literally had 29 M dashes in one article, which is a telltale sign that he's using ChatGPT to write the whole damn article bagging on AI. So I don't think all of the bears are genuine here. Maybe remove all 29 of the M dashes. But anyway, another thing that I thought was sus. So I looked at their accounts receivable breakdown, and you could actually see this under the notes. It's called the under the balance sheet components section. And I wrote this down so you could see it a little bit more visually, because the way they put it in the 10Q isn't really obvious. But this was also concerning about NVIDIA. Watch this. So on accounts receivable, on January 26th, customer number 1 accounted for 17% of accounts receivables, and customer number 2 accounted for 16% of accounts receivables. Okay. Well, we know accounts receivables are up like $10 billion from January. But then I look at this. The big customers, customer number 1, 2, 3, and 4, all of them are now accounting for big portions of the receivables. So the biggest customers are now not paying. That's odd. Now, yesterday, in fairness, when I only saw the press statement, I'm like, well, I mean, their revenues are like up a double year over year. Like, of course, accounts receivables are going to go up. But it's odd to me that it's not everyone who is seeing their accounts receivable going up. It's actually some of the largest customers, which these are probably CoreWeave, Microsoft, I don't know, whatever. The other, Oracle, that's the one I was looking for. Oracle, right? So the biggest customers are slowing down their payments. Interesting. Somebody says, Jensen only said he was sold out of cloud chips, not Blackwell. Interesting way to put it. Interesting. Okay, so now what we have is, let's see here. All of this comes at the same time as you're getting people getting really sussed out about OpenAI, because OpenAI is seen as this company that is basically making all of these commitments to spend money, like right here. Since it launched, OpenAI has been the one to beat. NVIDIA and Microsoft are investing $15 billion into Anthropic, which in turn will spend $30 billion on Azure and NVIDIA chips. OpenAI is doing the same thing, which led the stock market to fall, or at least Microsoft fell after the announcement. They say here that, OpenAI is going to spend $300 billion over the next 5 years in compute power from Oracle, but NVIDIA is going to invest $100 billion into OpenAI, and, Oracle is buying NVIDIA chips. So it's all a giant circle, right? But I thought this was an interesting statement over here. In the Economist article, actually can't see exactly where the statement was, but where was the statement about them being credit? There. That marked the start of $1.4 trillion of spending commitments by OpenAI, which raised fears in financial markets of a binge by uncredit-worthy borrowers to finance new AI data centers. Yeah. That is what you're seeing. So it's not just the economists now talking about cracks appearing in OpenAI, but you literally have the Financial Times questioning who is the auditor for OpenAI. And all they could find was this financial filing right here from 2023. And this financial filing was put together by an accounting firm right here in San Francisco called Fontello, Dunfield, and Otake Limited Partners. And if you go to their website, here it is. Hold on. Let me get myself out of the way so you can see the full website. Here it is. Here, let me go to full screen so you can really take it all in. There it is. Yeah. So that now has people going, who the hell audits OpenAI? Now, OpenAI, in fairness, is a private company, and they don't have to disclose their auditor. In the United Kingdom, they're supposedly audited by Deloitte. But here's the problem regarding the big auditors. You ready for this? This is crazy as well. Ernst & Young, one of the big four, and KPMG, the other big four, sell products that use Microsoft Azure OpenAI tools. Deloitte definitely uses OpenAI internally, and PwC sells OpenAI products. So, in other words, Deloitte is using OpenAI products, and they might be the auditor for OpenAI, or these people are doing, accounting audits for them. We don't know. It's a private company, so we don't know. So the Financial Times is like, hey, if it's a big four, they might be a little conflicted because they literally either sell or use OpenAI. And if it's not a big four and it's this guy, well, then that might be another problem too. Hashtag just saying. So it's weird. And all of this comes out in the 10Q after all of the fanfare, which is also annoying. Okay, now what else? Well, basically, when we put this together, Jensen tells us, oh, don't worry, inventory's going up because, we're sold out and we're just trying to make sure we have enough in the pipeline. Really, because your finished product inventory doubled. That's sus. Okay, that's weird. You told us a half-truth. You're having to guarantee CoreWeave so they don't go bankrupt so they can keep the debt cycle going. Private credit markets are funky, and at the same time, your prepaid supply and capacity agreements are declining by 12%. It's just odd. It's odd. And if we go back to the days of history, if we go back to Cisco actually beat earnings over and over and over again going into the dot-com bubble. And guess what? The dot-com bubble didn't burst because Cisco missed earnings. They actually were beating earnings. The dot-com bubble burst in spite of Cisco beating earnings. People just got sick and tired of what was going on and the valuations of what people were paying. And look at this. As I get to the end of this segment, AMD now down 420. The Qs literally at 595. Holy smokes. In my alpha report this morning, I'll pull up the PDF version because I don't think people will believe it. But in my alpha report, I'll give you the preview that I gave. Oh, well, this will work. This was a segment of our alpha report today. I said that best case today is we slowly get to 617. That would be bullish through December 8th. However, I said the Qs need to hold 107, and we we need, I literally in caps put it, we need to hold 232 on AMD, and we need to break 200 in NVIDIA. Otherwise, if we lose those two, if we lose 232 on AMD, and we lose 200 on NVIDIA, we could risk losing 607. If we lose 607, we trend back to 595. I kid you not, that is my alpha report this morning. And look at the damn Qs. Trying to get to 617, but what happens? We can't hold 232 on AMD. We can't hold even close to 200 or 198 here on NVIDIA. And so what happens? We plummet. And as soon as we lose 607, straight back down to 595. in the Alpha report, signed, sealed, and delivered to you before the market opened. Crazy. Anyway, this is wild. And I don't know what to say, but it is wild. And I appreciate all of you who joined in the Alpha report before that that coupon code expired. Yeah, there you have it. All right, let's see what the doomers are saying.
Being worth $5.6 billion. I feel like that's the way things go these days. Tell us a little bit more about who is behind this company, not just Alphabet, but the other folks invested in it.
Yeah, absolutely. So we have Sergey Levine, who is an esteemed academic in robotics. We also have a group of former DeepMind researchers, as well as other people from sort of leading robotics and tech companies. So part of the reason that I think this company is able to attract such a high valuation is it's one of the few that's seen as very well suited to make some kind of breakthrough in robotics, the way that we've seen breakthroughs in, AI for chatbots.
And where are they at in terms of deploying their software on the actual robots that they're looking to do work on?
Yeah, so they, are basically building what they call sort of the brain, the AI brain for robotic machines. And they've started using this software of that brain and actually applying it to these robotic arms. And so, they posted videos. They have this sort of being used right now in research and training capacity. But they have these arms that can fold laundry, can pack up boxes, can even make coffee, as they showed in their demonstrations.
I don't believe it. I think making coffee is like pushing the on button on a Keurig. I feel like a lot of this is kind of overblown and a scam at this point. All right, let's go hop.
Memory plays that you can think about getting into. But the market right now is in the mood and in the environment of wanting to raise liquidity and remove a leverage that's in the system. And when you have names like AMD and Micron that have, to a certain extent, gone parabolic here over the last 45 days, they are clearly going to be susceptible to more aggressive selling than maybe some of the other semiconductor names that we view as quality, like a Broadcom, like a Lam Research, like a KLA Corp.
Right. One thing that doesn't seem to be a factor here is valuation, because while you were talking, I was just looking at the valuation of Micron. It's only trading at about 12 times forward earnings. So valuation doesn't seem to be the story, Steph. How are people picking the stocks that are going to trade lower today? Because we mentioned, and we were talking about this all throughout the day, Walmart's up about 6.5% for a company that size to make a move. That's incredible. A lot of other names like Broadcom still higher.
People go hide in Walmart because... And we did just lose 87,000 on Bitcoin. Somebody asked me in the chat, how come I don't buy Bitcoin? I don't buy Bitcoin. Well, I'm going to be very blunt with this for two reasons. Number one, I prefer real estate. I'm sorry, that's a boring answer. That's my bread and butter. I know I can get a discount on real estate, so I buy real estate, right? But the second thing is, I think that Michael Saylor is running a Ponzi, and I think the best time to buy Bitcoin is when Michael Saylor goes bankrupt. So that is a position that I've maintained for years. And I think the true bottom in Bitcoin pricing will be when and if Michael Saylor goes bankrupt. The day after he goes bankrupt, there will be so much panic. That's probably when you will be at the lowest prices ever. And that would be an interesting bottom. That's sort of my take on that. Anyway, let's keep listening to this. A good question.
Because these are great companies that are now getting caught up in all of this noise. And I think that that's the long-term opportunity.
So would you count Palo Alto Networks in that same, basket or bucket? You own it, Joe owns it. Bryn, you own the BUG that holds it as well. I mean, Steph, is that in that same basket? The current quarter guidance was a bit weak, but it was a strong report.
Oh, it was a very strong report. I think it has nothing to do with the earnings because they beat and they raised guidance. I think it has to do with the second acquisition that they've done.
Chronosphere?
Yeah, they did another, right? So I think they've done 2 deals now in a span of like 2 months. And I think that's a lot to handle. That's a lot for any company to handle. While I do think it is very, very bullish for the long haul, platformization is what it is all about. It's offering the most stuff for your customers, and not one company out there, not even CrowdStrike, which is the very best, Palo Alto's number 2, none of them offer 100% of their stuff to their customers. And so you need to make acquisitions. And I've said...
Somebody here writes, Apple did what they always do, wait for someone else to perfect AI, play the long game, no AI strap. Yeah, I agree. I actually agree with that. I think you're right about that. I think Apple did a great job. And it makes sense because if the LLMs become commoditized, then, who wins? Well, somebody like Apple wins, who has the users on device. Or Google to some extent, right? Like Google, you got to give them credit, man. They've very, very impressive. Like they realized, oh my gosh, this AI stuff is an existential threat to our stuff, to search. And they came in, fought, and so far won. Gemini's great. I love Gemini. Even just what it can do with image generation, my goodness, it's fantastic. I actually think it's better than GPT for many things. Anyway, let's see if anybody else is complaining here. Looks like we're trying to get back to 60 or 87 there on the Q or on Bitcoin.
But speed is important to consumers, among other things.
I like free speed. I don't like to pay for it. For more on NVIDIA's blowout earnings report, tune in to Liz Clayman's interview with CEO Jensen Huang. That is coming up at 3 p.m. Eastern. And we want to hear from you, our viewers. So if you have a question for us, go over to our X page, leave a comment. We'll answer your questions in tomorrow's Ask Us Anything segment. And next, we're getting a look at our jobs picture from September because Schumer shut the government down. And it's better than people were expecting. We'll explain it when Big Money returns.
Boring. Complaining about the Schumer shutdown. Oh, man. Let's go to the Doomers here for a moment. Okay.
Now, that actually missed analyst estimates. Are there any negatives in this earnings report? I mean, aside from not meeting the highest bar, for instance, was there any blemish in the earnings report?
Yeah, the reality is that the data center unit and compute, is 90% of sales, and that today, present day, the market looks beyond that legacy business for gaming with NVIDIA. There is still a lot of unanswered questions. And in the course of that interview, if we're just being frank about it, there were lots of questions that Jensen evaded. One of them was, are you confident that OpenAI and Anthropic, as examples, are actually good for the cash that they've committed to fund all of this infrastructure? And the way that he answered it was, well, we're good. Like, our cash balance is strong. We've been disciplined and discerning in where and how we invest that money. But there is still that concern in the marketplace, the amount of leverage that is out there, the role that debt is playing, particularly for names like Oracle, right, which are very core to the infrastructure build out in the United States, at least. So there are unanswered questions, but at least with NVIDIA, things seem very good on both the demand and supply side.
Are you kidding me? Fontello was the auditor for Cisco? Shut up, dude. Shut up. No way. I don't know if I believe that. I'm gonna fact check that in just a second here. That's crazy if that's true. And by the way, oh, okay, yeah. Hey, shout out to those of you. A bunch of you joined. Did you get in, Ray? There was somebody who asked me to briefly extend the coupon code, so I extended it for like 11 minutes just so they could get in. And shout out to those of you who joined. Quite a few of you popped in there. Hopefully, Ray from Asia, you were able to use it. Anyway, dude, that's crazy if that's true though. Here on that auditor, I'm gonna look that up right now. Recording date. Okay. There we go. Oh, shoot. I screwed that up. Okay, that's fine. Let's go back to this for a moment.
Chips that can go around. And Jensen has also expressed over and over and over again that he would like to resume sales to China. For now, he is proscribed from doing so by the Trump administration, by the U.S. government. Export controls forbid that for national security reasons. But President Donald Trump has indicated he is open to the idea of perhaps selling a deprecated version of that Blackwell chip to to customers in China. Now, the question is, will the hawks here in Washington go for that? And they so far are indicating no. And this effort to include that measure in the defense bill is something that we are seeing as a way of holding the president back from keeping, as a way of keeping NVIDIA out of China for longer.
Right. And what's fascinating about this legislation, it's called the GAIN AI Act, is that it's got bipartisan support as well.
And it also has this America First appeal and framing that you would think would land well with the Trump administration. And yet we do see a number of key officials, from the president to his AI czar, David Sachs, favoring this view that, look, to be able to compete with China globally, we have to compete in China.
No way! You're right. Holy crap. Fontello, Duffield, and Otake. On the Cisco? This can't be real, dude. What? Cisco Systems Foundation from 2004. Oh my Lord. You have got to be kidding me. Cisco Systems 2004. Oh. Wow. Okay. So, and then here's the Sam Altman. Oh, dear Lord. You just can't make that stuff up. No. Look, watch me put this together now. Okay, hold on. Okay. Cisco. This is the OpenAI one. Let's put a little box around that. Okay. There we go. So this is Sam Altman. Oops. Sam Altman, Fontello Otake, and Fontello Duffield Otake, Cisco Systems, 2004. Oh my gosh. We gotta tweet that. That's hilarious. This is absolutely ridiculous. Okay. And what should we caption it? The same auditor, or not auditor, the same accountant that prepared Cisco's Form 990 in 2004 also prepared OpenAI's 2023 Form 990. You can't make this up. Next thing we know is these people probably... I wonder if these accountants also helped with Epstein's Form 990. Too soon, Kevin! Too soon! No! Don't post it! Oh, you posted it! No! You're gonna get canceled! No! Oof. Oof. Kevin, it gets worse. Look at their 1999 filing. Why? Stop. What's in there? So Cisco's 99 filing? Did you... Let me see here. Wow. Yeah, maybe... Hold on. That's 2004. That's 2000. Yeah, no. I only have 2004 from what y'all sent. Yeah. Yeah, this is crazy.
Kevin is much more interested than most people, by the way, in the balance sheet.
Yes. And Kevin is not suicidal. Okay, this is crazy. Okay. All right. So, what the hell? So, the Qs are now... They have now plummeted to 592. NVIDIA is now down almost 2%. And CoreWeave went from being 10% up to being down. IREN was up 14%, and it's now only up 3%. Adobe goes red. Everything else goes red except for Walmart. People are fleeing to safety. And Bitcoin down under 67. If you're wondering what happened, I just posted a video of the shenanigans that NVIDIA's pulling. And so I called it the stock market just got rugged by NVIDIA. You can go watch that. Well, it depends what title you see. There's 3 different titles, but it doesn't really matter. Oh, I should put some tags in here. NVIDIA. There we go. Oh my gosh. Okay, let me listen to this because this was the other private credit issue.
News. She covers munis for us. Thank you so much.
Okay, that was the United poll. We saw that because United was going to do a raise. But yeah, OpenAI has some shenanigans going on. Or, sorry, NVIDIA has some shenanigans going on in their earnings report. Their 10Q that they dropped. And as soon as that 10Q comes out, now people are starting to dissect it. And it's like, oh, let's go back to raising cash. And, you know, lower chance now of a rate cut because of that jobs report that I'm, of course, entirely doubtful that it's rigged. You know, it's not, why would Donald Trump rig it?
But to bring it back to jobs and the labor secretary.
Yeah, talk to me about jobs.
Highlighted in this report, which is that you're seeing jobs in healthcare in the private sector. You are not seeing what we saw under the Biden administration. And Brian, you would point it out in every report that would come out. It's government hiring. It's government hiring. It's government hiring. That started to really get scary. Obviously, with Doge and President Trump, you know, the government has been scaled back and waste has been removed. And I think that's a positive thing. But to bring it back to the first block and the AI conversation as well, we're in a shifting landscape in what the jobs are going to be. And I don't necessarily think that anybody knows exactly how that's going to look, and it's going to sort of morph and ebb and flow a little bit over time.
Okay, I got the 99 one by, thank you for the $2 donation telling me all I had to do was change the URL. I did it, so I changed it to fiscal year 2000. Okay, so what am I looking for? I'm looking for the signature block. Wait, why is this part redacted? I don't know. Fontello. Well, this one's not. No, it is indexed. I don't know what I'm looking for on this one, but I will, because I don't think it's just a reference to the same company. And I don't know, books in the care of Larry, Cisco. Investment fees, accounting fees, asset management. Okay. Books in the care of. Yeah. This is a weird comparison though. But anyway. Unless you wanted me to actually look at 1999 here, which I guess would then be 1998, right? Yeah, 98. So if we look at 98, it's kind of cool you can do that. No, it's also blurred out or redacted. Interesting. Huh. Okay, so 87 here. Tesla's basically given up everything that it had going for it today, which is crazy. NVIDIA bobbing around now at negative 124, trying to get back to 595, which is kind of a critical line. The fact that we collapsed there is just crazy. Ay. Okay.
Ratio in the sample. So it's like if you adjust the calculation, it's not because of good news.
And we're going to use all this to feed into our next conversation about what the Fed is or is not going to do. The latest Fed minute showing some cracks, the great interest rate divide. We are showing you what they said. That's next.
Okay. So now what we ought to do is, I know this isn't the most exciting for everyone, but I want to hit it. So come on. All right, so if you want to know what's going on in the market, watch the NVIDIA video I just posted. That'll give you an idea of what's going on in the market, why the hell everything's selling off. There's some sus stuff in NVIDIA's reporting, right? But we're going to take a quick look at this. Give me 1 second here. Okay. All right, there we go. Y'all remember the UPS crash that came barreling down after an engine completely detached from the fuselage, one of its 3 engines, leading potentially its rear engine to compressor stall out, and then its right engine having no chance at maintaining lift for this aircraft. This aircraft was doomed from the moment it started its takeoff roll. Well, we now have the FAA preliminary investigation report, and it's just been issued. So let's take a look at what they say happened in this crash, because they have frame-by-frame footage of what happened here, and I can't make this up. You literally see the engine blow up and detach from the aircraft, which now creates a substantial amount of asymmetric drag on this fuselage, which makes controlling this substantially more difficult. Not to mention that this DC-10 could have potentially had severed control lines after this explosion. This is a complete rupture, showing literally the engine. Look at this. The engine not just, it doesn't like fall off. It blows up and goes airborne at rotation. Now, what's shocking about this and unfortunate about this is at this point, by frame 1 where the engine is fine, they have already committed to the takeoff. Remember this, I'm a jet pilot myself. Once you commit to the takeoff, V1, we've committed. VR, rotate. They're already in rotation. They are so committed. They are going flying. The only way you're coming back in an engine fire or failure is by turning around. But good luck doing the impossible turn when you don't have any thrust. It ain't happening. You're looking for a place to crash land. And the fact that the engine essentially blew up the moment after rotation is insane. Wait a minute. Holy smokes, look at this, look at this. It actually just disconnects. In frame 2, you could literally see the engine disconnect. So as it appears, as the forces of air on takeoff got under the engine, it separated the engine, tore the engine off, severing the fuel lines, causing it to explode and completely detach. This is insane. Now, mind you, in a prior accident involving the predecessor of the DC-10, where we also had a detachment of this engine. The reason it was found out after investigations that these engines were detaching was that when they go into service, a lot of the airlines have started using forklifts to hold the engines in place while they service them, as opposed to completely detaching them to save on maintenance costs, because you can kind of do your maintenance while it's still roughly in place. The problem is, if you then harm or damage the control or the, I should say, the support beams that hold these into place, they end up falling off or disconnecting somehow. Well, looks like that's what happened here, but let's actually take a look at the preliminary report here. So the DC-10 was destroyed, MD-11F aircraft, which is a sister aircraft of the DC-10, was destroyed after it impacted the ground shortly after takeoff. The 3 crew members on the board and 11 on the ground were fatally injured, which is terrible. There are 23 on the ground who were also injured. In response to the accident, the NTSB traveled to the site and began the process of documenting. The parties were informed about the special investigation. They collected the information. Okay. The taxi and takeoff roll were uneventful until the airplane rotated for takeoff. Airport surveillance video of the airplane showed the left number 1 engine and pylon separating from the wing shortly after rotation. That's exactly what happened on that American Airlines, I think it was American Airlines DC-10 engine fell off. I want to see the exact date of that. It was, yeah, there it is. Flight, here it is. This was it. American Airlines Flight 191. This was the aircraft where they also had the engine maintenance, and the pylon structure was implicated right here. Engine separation attributed to damage to pylon structure holding the engine to the wing caused by improper maintenance procedures at American Airlines. That's what had to do with the forklift, sort of holding it in place to save the man hours. So it was all about saving money on maintenance. And sure enough, it led the engine to detach. Now, we don't know if that's the same thing that happened here with UPS, but engines aren't supposed to just fall off like this. This is insane. And then when it fell off, it blew up. The airplane initially climbed, but they did not get higher than 30 feet above ground level, according to the radio altitude data from the flight data recorder. The airplane cleared the blast fence beyond the end of the runway, but the left main landing gear impacted the roof of a UPS supply chain warehouse. The airplane then impacted a storage yard and 2 additional buildings, including a petroleum recycling facility that was mostly consumed by fire. Holy smokes. Oh my gosh, this is so devastating. The fire in the area of the left pylon attachment to the wing continued as the airplane cleared the blast fence. How does the engine fall off? Now, mind you, this aircraft was, I believe this was a 1991 aircraft, if I recall. So that puts it at 33 years old. Now, aircraft, it's important to remember this. Yes, old aircraft can fly just fine. Asterisk, if they're maintained well. But because maintenance relies on humans, if you actually look at the aircraft incident rate for older aircraft, you have about twice as many incidents in aircraft over 30 years old than in younger than 30 years old. So even though you might only have an accident 1 in a million flights, in an older aircraft you might have 2 incidents in a million flights. So that doubling matters. So older planes can be problematic. They require more maintenance, and as a result, there's more room for potential error. So we have accident site composite view. Okay, let's see here. Witness, tower reported the takeoff speed appeared normal for that type of aircraft. However, the climb rate was not normal. The captain, who was the pilot monitoring, I know that sounds ironic. It basically means the first officer was flying, for those of you who are not pilots. This is fine. Normally you take turns. Like the first officer will fly one, the captain will fly a leg, and they kind of trade. That's normal. The captain had accumulated 8,600 total flight hours. Oh, wow. This guy's got hours, man. That's impressive. 4,900 in type. That's impressive. The first officer had 92 hours. These were very skilled pilots. 994 in type. That's fine. Relief officer had 15,000. These were 3 impressive pilots. This is a loss for the aviation community. This is sad. Not that, a lower hour pilot dying is not a loss, but you know what I mean. Like, these are skilled people here. Airplane was equipped with a flight data recorder and cockpit voice recorder. Both were successfully downloaded. We have the data spanning older flights as well. This is an MD-11 3-engine wide-body passenger airplane, originally manufactured, blah, 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 then merged with Boeing. Okay, we know. I want more details. The pylon-to-wing connection. The left and right engines are attached to the underside pylons that are in turn attached to the underside of the wing. Number 2 is attached to the base of the vertical stabilizer. The left and right pylons attached to their respective wing via a forward-mounted bulkhead, thrust link assembly, and aft-mounted bulkhead. Okay. Let's see here. The thrust link assembly located immediately behind the forward mount lower spherical bearing primarily transmits thrust loads, and the pylon aft mount is assembled and composed of 2 independent fittings bolted together with lugs. Okay, got it. For references, the pylon aft mount, spherical bearings, blah, blah, blah. Okay, clevis underside. Okay, here. All right. Here's a depiction. All right. So it's attached to the plane. Got it. By this pylon. All right. So now what happened? Here we go. Here are the lugs. On exemplar installation of the pylon aft mount to the wing. Okay, that's the figure 6 right here. That's this. This is an example. Okay, the wreckage. The wreckage was spread. Recovered portions were transferred to a secure hangar. The left lugs were found fractured. Oh, wow. The metal just fractured. This is why older aircraft can have problems, because the actual metal fractures. It doesn't even necessarily have to be a maintenance issue, because if you can't see the fracture, what good does it do you? Now, hopefully you can investigate to find that the metal is becoming too strained before this sort of separation takes place. The fractured and separated upper portions of the lugs were found adjacent to the runway. The mounts were found at the accident site. The bolts remained attached. So the bolts were attached. What actually looks like happened is the spherical outer bearing, outer race had fractured, exposing the ball element. See figure 8. Oh, wow. Oh, wow. It just sheared right off. Wow. Complete failure of the actual structure of the aircraft. Fractured spherical bearings. And then an example on the right. Holy smokes. NTSB Materials Laboratory, spherical banner, aft lugs. It's just ripped apart through fractures. For the forward lugs, the fracture consisted entirely of overstress, with no indications of fatigue cracking. That's the problem. You know, it's easy to point the finger and go, oh, it's definitely a maintenance issue. But then you look at it and you're like, sometimes there are no issues. Like, you can't see the issues. However, some, after an initial clearing of the fracture surfaces, examination of the left pylon aft mount lug fractures found evidence of fatigue cracks in addition to areas of overstress failure. It's age. I don't know if they could have, I mean, I hope they could have prevented this by finding it if they specifically looked for that. But this aircraft had taken off 21,000 times with 92,000 hours. The plane that I'm rated in, that I flew, you know, for 600 hours or whatever, has 900 hours. That's a fraction of 92,000. That's incredible. So it looks like, unfortunately, I mean, they've then since grounded these older aircraft. And then they do talk about, oh, there it is, American Airlines Flight 191, where the left engine in the pylon assembly was separated. But that was because of the forklift. I don't know if they mentioned that over here. They don't. But there you go. There's the preliminary report on what happened with UPS. Fatigue, cracking, and stress leading to the engine literally disconnecting and then blowing up and separating from the aircraft. I hope maybe a mechanic or somebody with experience can tell me, just so we can have some comments in the or some comfort in the comments, that this is something you can actually catch and prevent. This is very sad and very scary. What else is very sad and very scary is that the NASDAQ can't even hold 595. Holy smokes. This is insane.
They mature right away. You got to pay it out, and you got to do them all over again.
And Yellen started on the road
big
to that,
thing, yeah.
but he's stuck with him.
Yeah.
All right, coming up, Elon Musk says AI will make money obsolete. We're going to show you what he said in our tech check next.
I hate to say it. I think Elon's lost his marbles a little bit on that. I think he's got to be he has to pump the robots so hard because his compensation relies on it, and they're running out of money at XAI. I think if Elon isn't able to pump Tesla stock, XAI could go bankrupt. I know it's a crazy statement, but think about that for a moment. If Elon can't fund XAI with selling Tesla stock, or at least margining against Tesla stock, XAI could go bankrupt. It's a possibility if the bubble bursts. Could actually be likely. Crazy.
And we did make new lows. So that at least implies that there are people who have portfolio stress who need to sell some stuff. And I do think that even the morning highs in the S&P 500 I was flagging earlier, sometimes if it's just a reflex oversold bounce after the market's been pulling back, it gets halted by like a 20-day moving average. I mean, it's really short term, but that's exactly where we stopped. And where we're trading right now is basically Tuesday's lows. So the market is trying to test these ranges and see kind of who needs to unload some stuff on rallies, and you have it from there. It's not that much of a fundamental story.
All right, sell some stuff. But
This is a liquidity issue, and again, I'm not trying to shill this, okay? Like, there's not even a coupon code right now, okay? I extended it for like 11 minutes for a few of you in the chat who were asking for it, but there's no coupon code right now. I'm not trying to shill this. I want this just to be a lesson. Look at this from the Alpha report, okay? I just want you to see what I wrote. If we lose 607, we trend back to 595. That would be odd, but it would signal that people are strapped for cash. And great news isn't even enough to keep the momentum going. This is a liquidity issue. People need money. 310 says I need the coupon code. I feel like you're being facetious. But anyway, no, I appreciate y'all. I mean, a lot of you use it. It was great. But damn, I think this is this is critical. And keep in mind, the Alpha report told us what to watch for this. So what I said in our Alpha report was that you have to watch 232, because if we lose 232 and we can't break 200 on NVIDIA, it's bearish. And you had an early warning, very early warning, for probably 2 hours this morning, maybe at least an hour this morning. You had an early warning that this wasn't going well. Also worth mentioning that, we described the Alpha report live together. So, we strategize as well in the actual live stream aspect of it. But it's remarkable. Sonny says, he locked my house to house hack. In Kevin We Trust Now. Oh, well, thank you. I appreciate that. I'm not here to shill house hack. I love house hack. Read the solicitation over at househack.com. But hey, if the market crashes and the Fed cuts rates rapidly, we'll keep paying 5% to the people who signed up for it through conversion, obviously, because that's what we committed to. But I don't think we'll keep advertising 5%. We'll lower the rate on that fundraise, because why pay 5% if rates are going to plummet? You don't have to anymore. Oops, almost dropped my headphones here. This one's running out of battery already. So, no problem. Okay, let's see here. Pop this in here. Somebody says, I love the Alpha. Oh, thank you for that. I appreciate that. What's the next stop? I think it's 577. I'll look right now. Okay, one sec. Okay. So AMD's stabilizing right now, which is good. But the next line, yeah, it's 577 is the next line. I mean, I don't think we have enough pain to really get there right now. Jeremiah says, Kevin, do you have liquidity issues? No, dude, we raised a crap load of cash. House Hack's sitting on a boodle of cash. We just got our 12th escrow just opened this morning. House Hack's got, I don't know what, like 11 or 12 million bucks in cash sitting around. I got a bunch of cash sitting around. Because I sold over the last few weeks like $9 for every $1 that I bought. Actually, it's probably more like 1 in 20. I raised a lot of cash. So, and I have no personal debt, so it doesn't matter. But, you know, I feel for people who do. You know, like, what if you have bills? Like, what if you're paycheck to paycheck, you're drowning in student loan debt, you got credit cards, and the hope is that, you know, like Robinhood stock is going to keep memeing up so you can pay your damn bills and try to get ahead in the world. Instead, Robinhood's tanking. You know, who's the poor bastard that just went on margin for this crap? You know, trying to get ahead. Where is he? I tweeted it. And I asked him, like, what phase of the cycle is this? Right here. We just hit the F-it deployed margin stage of the cycle. You know, Robinhood's barely down and the guy's going in on margin on this. It's crazy. So, you know, that was at 116. The poor damn thing's at 108 right now. You see margin calls soon if people keep doing stuff like that. It's just bad. It's not good.
Women's healthcare company. I've been looking at this stock for about 6 months.
Somebody says in somebody's chat they're talking about buying Hood and BMNR. Well, I think unfortunately I have never once promoted BMNR. I think it's you know, just like a sailor light Ponzi. I think it's almost like financial malpractice to encourage that sort of, you know, like if you want Ethereum, go buy Ethereum. But, you know, it's no surprise to me that Tom Lee gets $13 billion to manage and all of a sudden he's down more than $3 billion on it. It doesn't surprise me.
Like the total addressable market.
Because if you get paid to be an Uber bull, you never look at the bear case. And then you don't hedge yourself. You know, you don't protect yourself.
Once we get some of these issues, like obviously the government shutdown's behind us, some job stabilization, that we're going to see more business just go to healthcare in general and more money flow into the healthcare sector?
I mean, I think we have been seeing healthcare act really well in the last month and a half. So it's entirely possible it can continue. They've lagged for such a long period of time. But I really do like this one particular area within healthcare, focusing on women's issues. And they're doing it really well.
Come on.
Exactly.
Right? Until you got a TV and understood what news was, then this became a job. So I sort of liken it to that, where
Taylor Riggs showing the shoulders today.
We can't yet imagine because it hasn't yet been created. But I'm hopeful that it will be just the way ours was and didn't exist a couple hundred years ago.
I hear you on that, but what's scary to me about what Elon said is this idea of work becoming optional. Because I know a lot of people who will choose the option of not working over working. And if money becomes obsolete, he said money will stop being relevant, then what do we have? We go back to this idea at school where all of a sudden, to make it more fair, we don't want to look at SAT scores. But that was the only benchmark that we had to be able to compare each other to. And so if you don't have work as an option and you're not earning money, where are you getting money from? And how is this all going to work? I mean, to me, it almost sounds like that's a world of complete chaos.
It's a world from WALL-E, the animated film. He is literally quoting the film WALL-E, where humanity was flying around the universe and robots were taking care of everything. And it still takes energy and time to grow and harvest vegetables. So if you need energy and time and those resources to grow crops, you will need money for them. So stick it, Elon.
I do like growing vegetables. I might do more of that in the future. Charles Payne, we love you.
Thanks a lot. That was fun.
Thanks
Thanks a lot.
Don't forget to tune in to Making Money today at 2 p.m. It's not growing vegetables just yet.
Not yet.
Coming up, the September jobs numbers in, that and much more with Kennedy in the next.
Kennedy? We like Kennedy.
When you're a part of the club.
I want to be part of the club.
Almost clear skin. Plus, many had clearer skin and less itch, even at 4.
Two factors. Look at the shift to capital. Look at the broad change in the investing landscape.
it's a no-brainer. You have to spend more and more time researching private companies.
What does that research look like, though? They're not going to be able to publish buy, hold, sell ratings on private companies, right?
So the first challenge you rightly point out, right? It's not about buy, hold, or sell, but even the more fundamental stuff. If you don't have complete financials, how do you model stuff? How do you provide useful insights? At the same time, that is also a positive. You will have access to corporates. Companies would want a greater segment of the investing society to understand them better, so they will spend time with analysts, and that's where you actually have a value add, because today the other threat for analysts is from artificial intelligence. Right. If you have all the financials out there, if you have all the information about a company out there, a machine will be able to generate insights that rival an experienced analyst's insight. However, a machine cannot walk into a meeting necessarily with a private company executive and try and understand different market forces right now. That's where there will be a value add. And look, at the end of the day, an analyst is not just an island unto themselves, right? They have to think about it as one part of building relationships with the company, and that will automatically lead to other business or for their firm with these private companies.
Right, being an ambassador for their firm and welcoming, the private company to the bosom of the company that they currently are in. Thank you so much. Bloomberg's Chief Wall Street correspondent Sri Natarajan with the latest here on research analysts expanding their coverage to private companies. All right, let's monitor what's happening in equities right now. We can see a steady decline here in the NASDAQ 100 over the past couple of hours. The NASDAQ now down by 1.4%, earlier gaining as much as 2.4%. This is Bloomberg.
Yeah, no, it's been a wipeout. Okay, it seems like Bitcoin's bouncing a schmidge right now. Qs are finding their bottom. A little bit of a recovery here on IREN, a little bit of a recovery on CoreWeave. Affirm's recovering a little bit. Axon, Rocket's got a floor. Netflix, Tesla's got a floor. Google stabilizing a little bit. Bitcoin, Ethereum, everything seems to be relaxing a little bit. It's just a matter of, are we going to crash into the close, right? Somebody's like, Trump, please tweet. Oh my gosh. Trump is not going to save you. The economy moves in spite of Trump. Okay. So... all right. Let's see what else we have here. I'm telling you, we got, what? It says 6,900 people have clicked on my live stream on X. And, 5,700 of you are watching right now live on YouTube. And I've got 92 likes on the same accountant that prepared Cisco's Form 990 in 2004 also prepared OpenAI's 2023 Form 980. You can't make this up. Like, this is, Elon doesn't like me. it must be suppressed. I guess I was too critical. Oh well. 55 basis points on the 10-2. We've got oil dropping, WTI down 80 basis points. Wow. Gold also down. Everything's selling off. Well, bonds are up. You're getting some dash for bonds. Okay. Reminder, if you haven't seen yet my latest NVIDIA video on the reveals, it's on the channel. Make sure you watch it, and then you'll have an idea as to why the market's dumping the way it is. It'll give us give you some early insight into what the hell's going on. Okay. So we talked about the cracks at open. We talked the information piece. That was SoftBank. We've got this. We covered this. Donald Trump fumes over Powell. I'd love to fire his ass. That's kind of a funny headline. Hold on, we gotta get that like that. Yeah, there we go. Lol. All right, what are they saying here?
Stale numbers on employment that aren't making anybody feel better today, just as the White House tries to soothe concerns about rising prices. I'm Joe Matthew alongside Michelle Jamrisco in for Kaylee today in Washington, D.C. And we're going to have much more on this ahead as we compare notes with Bloomberg's Michael McKee, digging inside the data. And we'll share insights as well with Kitty Richards from the Groundwork Collaborative. It's all after a look at Wall Street. Let's start there now. Charlie Pellet's got his eyes on the markets. Live from World Headquarters in New York. What happened to the rally, Charlie?
Indeed, completely fizzled, perhaps putting it mildly. At one point, we were up as much as 1.9%, Joe Matthew, but right now,
more than that.
Looking at the S&P, pull up the chart on Bloomberg, and we are down by...
Qs were up even higher, like 2.2.
It's lower, but just about the worst level of the day right now on the S&P. We're down 57 now, 65.86 where we stand. We have got the Dow Jones Industrial Average down 286 points now, a decline of 0.6%, while the NASDAQ Composite Index down now by just about 1.1%. 10-year at 4.09% with a 2-year 3.55%. Gold down $12 the ounce, 4,065. Drop there of 0.3%. And West Texas Intermediate crude down 0.8%, 58.97. So bottom line here, seeing losses in a number of different asset classes. Bitcoin, major story there, major sell-off down now by 4%, 86,990 on Bitcoin, so a decline of 3.9%. Nvidia had been the star.
Is this in part because of the odds of a rate cut going down? Let me look at that.
I do want to mention Ford shares now down by 3.6%.
No, because they've gone up. We're at 39% chance of a rate cut.
At an aluminum plant in Oswego, New York. That's a plant owned by supplier Novelis. Again, recapping here, stocks lower. The Dow, the S&P, NASDAQ, all in the red. S&P down 0.7. Checking Nvidia one more time, slumping now by 1.4%. Jobs Thursday, stocks selling off for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host here is Joe Matthew.
Hey, Charlie, thank you, as ever. We'll get back to Charlie in about 20 minutes and see where we're at. Supposing things could turn around again, if it happened once already. We'll take heart in Walmart rising today, as we've been telling you. Stronger than expected earnings, stocks up 6%. Then again, we could also worry about the fact that more people are trading down, which is improving business at Walmart. We might also take note of the fact the company's warning of rising prices thanks to tariffs. So we've got a lot of noise here when it comes to the economy. And with regard to this jobs report today, we're going to talk about this with Michael McKee in just a moment. It's interesting to look at the way the administration is framing this. Michelle Jamrisco with us again today in Washington. Do you see the statement that came out of the White House? That Caroline Leavitt has her take, the press secretary, the labor secretary has a slightly different, maybe more nuanced take.
Well, it's always a politicized report,
That's
of course,
right.
Joe, in any administration. This
Absolutely.
is something we can talk about with our own Mike McKee, but, it's hard to say how much power, how much credit or blame a president should get.
All right, I'm going to go. I got house hack work to do. I see some of you are still asking. I'm going to do this. This is the last time, then we're going to raise the price. MeetKevin.com. I'm going to extend it until 10:20. So I did 11 minutes earlier. Now I'm doing 17-minute window. If you want in, 17-minute window. That's it. That's all. And then together, that'll have been 29 minutes of an extension. That's it. Otherwise, it all expired at midnight. But I did 11 minutes for somebody this morning. I'll do 17 minutes right now. If you want it, MeetKevin.com. We are going to raise the price. And then it expires at 10:20. I got to go because I got a job to do. We just opened escrow on another project. I got to get these renovations done. They're really good wedge deals. I think we're doing really well with House Hack. Hashtag not a solicitation. Read the solicitation at househack.com. Love you all. Crazy day in the markets. Maybe I'll come back for market close. I don't know. Leave a W in the chat if I should come back for market close. Okay, I'll leave the chat open. I'll look at it. But good luck.